So a lot of times people think about currencies because of the term cryptocurrency, but I think a more constructive metaphor is to think of it as digital property rather than a digital currency. The use of a currency is as a medium of exchange, and the benefit of a currency is it's a tax-free medium of exchange. So when you make something legal tender in Japan or Russia or China or the US or Europe, it means that you can trade it 100 times a day at high frequency, and all the accounting systems are locked onto that currency, like the euro or the dollar, and there's no taxable event. So companies and governments are always going to want to price things and trade things in the fiat currency as long as there's a government, right? The only time that you're going to use a non-fiat currency for high frequency medium of exchange is when you're in a zone where the currency is literally collapsed. Like if you're in Africa or some war zone and the currency is literally collapsed, there is no government and there is no effective currency, then maybe. But in all the places in the world where the government's functional, the currency is functional. So instead of thinking about that Bitcoin replacing that currency, which it distracts you and it causes you to make all these mental mistakes. Like people go, well, it's only valuable to replace the currency, but it's volatile and it's not built in the accounting system and it's taxable. So therefore it's not going to replace the currency. And so therefore I won't buy it. See, that takes you down a rat hole where you kind of tie yourself in knots in a straitjacket and you come to the wrong conclusion. The right way to think about this is Bitcoin is going to replace all the assets that are currency derivatives, and it's going to replace all of the assets that are weaker properties. So for example, I'm still going to use the dollar to pay my employees, but maybe I won't hold sovereign debt or corporate debt on my balance sheet. Maybe I'll replace the debt with Bitcoin, right? Do I want to wait 30 years and get paid 3 or 4% interest for 30 years? Or do I want to own Bitcoin, which is appreciating at 40% a year and in the extreme will appreciate, say, 14% a year, right? Tax-free or tax-deferred. So if you think about it, Bitcoin's replacing bonds. It's not replacing the CNY, the euro, or the USD. It's replacing the bonds that are paying coupons in euros or CNY or USD. And then it's replacing value stocks because you bought that value stock, like that utility company, because it pays a dividend. And it pays the dividend in USD or euros or CNY. So if the value of the currency is falling 7% a year, then the value of the discounted cash flows is also falling, right? The discount rate is the 7%. So you got to take the cash flow from the value stock and take the risk-free rate of 7%, tack on a risk premium of 5%, and you have to discount the cash flows of the value stock by 12% a year. So you see, if you think about the math, you realize that the value of the cash flows from the company are falling exponentially, and the higher the inflation rate, the less valuable the cash flows in the future. Now, what kind of company don't I want to own? Well, a company that has a 1% growth rate in a 7 or 8% inflationary environment, because the cash flows are growing at 1% and you're discounting them at 12% because of the risk premium, right? So that's minus 11% every year forever. On the other hand, if the company is a monopoly and it's growing its cash flows at 20% a year and the inflation is 7%, then I might think that I might want to own that kind of company. Now, off the top of your head, what kind of company as a monopoly can grow its cash flows 20% a year for the next decade? How many do you know? That's like the Magnificent Seven, okay? There's 7,000 public companies, and 7 of them, Google, Apple, Microsoft, are the most famous, right? Yeah, you can literally, if you're a company, you can probably move to a different country more easily than you can switch your systems from using Microsoft.